We're kicking off our coverage here at the Total Wealth Symposium, and my first guest, Erika Nolan. She's the founder of 1291 Group of the Americas. It's an independent wealth planning firm. You're also a speaker here at the conference. Erika, it's our first time speaking. Welcome to Kitco News.
Thank you. I'm glad to be here with you.
Well, you've made a name for yourself because you've kind of gone against Wall Street norms and you invest in unconventional ways. So I want to talk to you a little bit about this today. Why'd you stray from Wall Street?
Well, I actually had the very rare chance of growing up just naturally more in the international space. And so when I was, 20s, 30s, I was traveling all of the time. And so I've had the unique perspective of being to almost 100 countries. And so through doing that, I really saw the emerging opportunities, and I could see that there were a lot of wonderful investment opportunities happening outside of America. And so that really colored my view. And so when I look at investments now for clients or how we build our portfolios, I'm always taking a worldwide view because that's the one I know the best. So while the U.S. is at the core of it, of course, there's tons of other opportunities happening, and there's I think, a shift underway about where we're going to see the next real growth opportunities. The West is getting very slow. We have very big economies. They're very hard to jumpstart and keep going. So while they're critical, they're still very important and very relative. You need to look at where you can see quicker, more emerging opportunities, and that's traditionally more in the emerging markets.
Well, you've been a wealth builder for years now. So you must have tackled and come across the precious metals. How do you feel that gold plays a role in building wealth for clients?
I think gold is absolutely critical. We are big believers in having real wealth, stores of wealth, of which gold is one of the most proven. There's lots of other things I hear people talk about over time, like, Erika, can I put my money here? Can I put my money there? And my answer is, well, how much gold do you have? Because you absolutely have to have some gold in your portfolio. Now, for us, we really look at wealth kind of in a spectrum. I don't believe that the old 60-40 balanced portfolio, set it and forget it, is going to work anymore. I think that the fundamental economic shift that's underway in the West and also in emerging markets has changed the way you have to look at investing. So for us, one of our core components of almost every one of our portfolios is some type of what we call alternative assets, because you have to include those, and it's not just including them at 5 or 6%. For us, it's about 25% of the portfolio that we would like to put in uncorrelated assets.
Yeah, so I want to ask you about that, because most people that come on the show usually advocate anywhere between, I've heard 5 to 10% in gold, but I know offline we were speaking and you like 15% of it.
Yeah, so we're actually saying 25% should be in alternative assets that are going to move unrelated to the market, but of that right now we're advocating 15% being in gold, because we think we're at we're seeing a lot of historic rallies right now. The S&P is making new highs, the Dow's made new highs, we have historic debt in the United States, many Western markets are carrying historic debt, we have company and consumer debt at all-time highs. Consumers are moving back towards all-time highs, but we're seeing them turning the corner. When you're looking at all of those risks, I think we also have I say we also have a political situation in the United States, not that it's good or bad, but we're in an election year, and that brings in a lot of unknowns as well, and so the market reacts to that. When you're looking at those three windows, I think you have to have a higher position in gold.
But how about on the flip side, people would say, well, we have, most people would argue for sure a Fed rate hike coming. If it's not, next week, it'll probably be December. We have a stronger U.S. dollar, which they would say is not going to bode well for gold. What do you say to those critics?
I would say that maybe their crystal ball is a little clearer than mine, but what I don't necessarily believe that the Fed is in a position to raise rates. I believe the strong dollar is one of those reasons. You're absolutely right. In the last 3 years, the dollar has moved up, but what that's actually doing is it's causing U.S. goods to be more expensive overseas. And already we know that if you look at the companies in the S&P 500, 48% of their sales are done outside the United States. So if I'm a Brazilian farmer thinking about buying a John Deere tractor and the dollar's just too strong, it's taking 30-40% more in real for me to buy that dollar price tractor. I'm going to make another consumer decision. I'm going to buy a Chinese model. I'm not going to buy it at all. And so we start to see what happens. Well, then U.S. companies aren't selling. And as soon as their sales start to come down, profit margins thin. And what do? They do what any good company would do. They look to cut costs because they want to keep their share price where it needs to be. And then we get back into weak jobs. A weak job market leads to a weak economy, and it puts the Fed in this vicious cycle where they have to decide, can we really keep rates higher? Do we need to cut? Yellen came out over the spring and said, hey, we are looking at what negative rates could do to America. That doesn't mean she says we're going to them, but I think it means it's still the Wild West when it comes to interest rates.
Do you have a forecast for gold that you're eyeing?
I don't. I know I have a lot of colleagues that make very big statements,
yes.
but I would say personally, I don't think that we're going to see a floor to the U.S. deficit. I don't think we're going to see a floor to the stress that a lot of Western nations are under trying to jumpstart their economies again. I think if QE had worked, right, we still wouldn't be in a low negative or negative, some of the West, interest rate environment. So I think we have to question that QE didn't do its objective. So we're still here talking 7 years later about low rates. Is the economy better? It's hard to say, right? It's got a lot of cracks in it, but it also has some green shoots. So I think we're in a very unique time, but I think in unique times, gold is absolutely something you need to have in the portfolio.
And before we wrap, I want to just get back to emerging markets. You say you liked emerging markets. How do you like investing in emerging markets? Is it through, cash? Is it through the stocks? Is it, how do you do it? Real estate?
Real estate is a good one. Right now a lot of REITs are coming up out of Asia, so it's an interesting way to do it. It's a little lower risk, plus it's got a little more of an income component, and you are getting the foreign currency there. That's one way to do it. The other way is equities. It's definitely not where I would put 15% of my portfolio right now, however. But I would say a lot of people who may say I'm not doing any emerging markets, I would say, hey, use the strong dollar, because the dollar is strong. And this is one of the ways it kind of can play to your advantage. If you're very dollar denominated now, take some of your strong dollars and go into these weaker currencies, either through currency straight out or through equities, because you're now actually going to buy more shares for your dollars, which means you also have a little bit of cushion. So even if the company falters a little bit, the strong dollar is still there.
So are you suggesting, is it best to be active in this market, or is it best to take a sit and wait approach right now?
It's a great question. That was actually what I spoke about in my presentation today. I think investors now in this market have to change their thinking. I don't think it's the time to sit out. I don't think it's the time to pull back. I actually think it's the time to be strategic and dynamic. And that's what I said to the room. I think investors have often kind of been a little more laid back and a more like, well, I've got a 40-60 portfolio, it's all going to work out. Right. I think that doesn't work anymore. What I think is you have to stay dynamic. So you have to constantly be a little more opportunistic and always looking to see what's coming on the horizon and reallocating it and readjusting and really staying much more focused on your investments and whether or not they're performing. Because people who sat in the euro and gold 4 or 5 years ago were kind of bitter. They were like, I'm not in the right place. They had the right thinking, they were diversified, but they were expecting returns that weren't there. My point is, hey, look where, if the dollar's strong now, be in the dollar, but look at how you can put those assets to work, and there's always a green shoot, and you have to be much more focused on capturing that and bringing those into your portfolios, and then maybe lowering portfolio exposure to the dollar or foreign currencies, but being much, much, much more active and focused than probably ever before.
Erika Nolan, thank you so much for stopping by Kitco News.
Thank you so much.
Best of luck and enjoy the rest of the conference.
Thank you. I appreciate it.
Thank you for watching our coverage. We'll have much more for you in the next coming days, so be sure to stay tuned to Kitco.com. Thanks for watching.